Welcome to Hibiscus Petroleum's Financial Results webcast. This webcast presents an overview of the results reported as part of our quarterly financial report for the 3-month period ended 31st December 2021 and released earlier today. This webcast has been prepared by Hibiscus Petroleum Berhad or the company solely for general information purposes and should at all times be heard and or viewed together with the full quarterly report for the same period that has been made available or published by the company on its website. This webcast may contain forward-looking statements which are based on current expectations, beliefs, and projections about future events or matters. By listening to and or viewing the webcast, you agree to the limitations and notifications set out in the disclaimer section of this webcast. Our presentation today comprises 4 components. In part 1, Yip Chi Yong, or CY, our Chief Financial Officer, will present the group's quarterly financial and operational highlights. He will be followed by Pascal Hoss, the recently appointed CEO of Peninsula Hibiscus Sdn Berhad, who will provide an overview of the recently completed asset acquisition. Lily Ling, Senior General Manager of Corporate Development, will then provide updates on the group's new vision, mission, and reserves. In part 2, Lily will discuss the overall oil market outlook. CY returns to present further details of the group's financial results in part 3. In part 4, Joyce Vasudevan, our Head of Corporate Finance, will then conclude our presentation with some key messages for this quarter. Should you have any queries, you may contact our Investor Relations team, headed by Lily Ling, via the email address provided at the end of this presentation. I shall now hand over to CY.
Hi, I'm CY, Hibiscus Petroleum Group's Chief Financial Officer. I'll now take you through an overview of the financial and operating highlights for the current quarter. I wish to stress that the positive financial impact of the newly acquired Repsol oil and gas assets, which completed in January 2022, will only be incorporated into the group's results in the quarter ending 31st March 2022. Notwithstanding that, I'm pleased to report that due to a combination of continuous attention to delivering smooth operations and prudent cost management, the group's financial performance improved from the previous quarter. The relatively strong gas price environment in the United Kingdom also positively impacted our Anasuria results in the current quarter and was a factor that contributed to the improvement of our profits. The group's revenue increased by 15% compared to the previous quarter. Earnings before interest, taxes, depreciation and amortization, or EBITDA, and profit after taxation, or PAT, grew by 13% and 17% respectively. The table on this slide shows the operational performance of both the North Sabah and Anasuria assets on a quarterly basis from the 1st of July 2021 until the 31st of December 2021. Focusing on the current quarter ended 31st December 2021, the North Sabah production facilities recorded an average uptime of 92%. Average daily net oil production for the current quarter stood at approximately 5,900 barrels, with an average OPEX per barrel of $13.06. These improved metrics are primarily attributable to a reduced level of planned maintenance activities in the current quarter. In addition, the current quarter was less affected by restrictions on movement, quarantine requirements, manpower and logistic constraints attributable to the COVID-19 outbreak. Approximately 587,000 barrels of crude oil, net to Sea Hibiscus, was sold at an average realized price of $75.15 per barrel, which was similar to the price secured in the previous quarter. In terms of expenditure, costs related to specialized studies, production maintenance, and support services during the current quarter resulted in a capital expenditure of 6.2 million ringgit net to Sea Hibiscus. Turning to Anasuria, the average uptime achieved for the current quarter was 75%, while the average daily net production rate was approximately 2,400 barrels of oil equivalent, or BOE, per day, both metrics being improvements over the previous quarter. In the current quarter, approximately 256,000 barrels of crude oil, net to Anasuria Hibiscus UK, were lifted, and sold at an average realized oil price of $72.02 per barrel. Included in the 256,000 barrels sold was an overlift volume of 90,000 barrels. This overlift was a result of a one-off option that originated from the joint lifting arrangement that was entered into with Ethica Energy in the middle of calendar year 2021. In view of the relatively strong oil prices at the time, Anasaria Hibiscus UK elected to exercise this overlift option. Anasaria achieved an average OPEX per BOE for the current quarter of $24.31 US, an improvement from the cost of $27.94 US in the previous quarter. Anasuria's operational performance for the current quarter continues to be affected by the unavailability of a critical component of the subsea infrastructure, which malfunctioned in May 2021. The critical component relates to a production riser that transports produced crude oil to the Anasuria FPSO. This component has been isolated from the primary production system. Until the production riser is returned to service, we anticipate that there will be an impact on calendar year 2022 offtake volumes and OPEX per BOE. Engineering and procurement activities are currently ongoing on a fast-track basis, with execution expected to be concluded in the third quarter of calendar year 2022. In terms of capital expenditure, Anasaria Hibiscus UK incurred approximately 7.1 million ringgit in the current quarter, primarily for riser rectification activities. I'll now hand over to Pascal to brief you about the new asset acquisition.
Hello, I am Pascal Hos. I was recently appointed the CEO of Peninsula Hibiscus Sendirian Berhad, a wholly owned subsidiary of the group. On 1st June 2021, Peninsula Hibiscus entered into a conditional sale and purchase agreement with Repsol Exploración for the proposed acquisition by Peninsula Hibiscus of the entire equity interest in Fortuna International Petroleum Corporation, or FIPC, for a total cash consideration of $212.5 million US. The acquisition was completed on the 24th of January 2022, shortly after all conditions precedent to the SPA were fulfilled as announced on 20th January 2022. The acquisition is transformative to the group, as FIPC holds a high-quality portfolio of production sharing contracts, or PSCs, in Malaysia and Vietnam. With the assets now under our operatorship, the group is well positioned to continue to build on our successful operational track record, which has been demonstrated on our other producing assets in the United Kingdom and Malaysia. At this stage, we have embedded a core leadership team into the recently acquired assets, and we are actively working on opportunities to further enhance value over the 2022 calendar year and beyond. Continuing on, this slide also details the rationale behind their acquisition. Key considerations included the ability to diversify into gas, as 50% of the new asset's current production comprises gas, as well as synergies between the Kinabalu and North Sabah assets. Performance data from the newly acquired assets will formally be made available in the update for the quarter ending 31st March 2022. However, for guidance at this time, I can confirm that on the production front, we expect to add a net of approximately 2.5 million barrel of oil equivalent of oil and gas to what is already being delivered by the North Sabah and Anasaria assets for the period between transaction completion and the end of financial year 2022, that is 30th June 2022. Also, as earlier forecasted, daily production rates have tripled from about 8,000 barrels of oil equivalent per day delivered by Anasaria and North Sabah to about 23,000 barrels of oil equivalent per day, with the newly acquired assets included in our portfolio. As mentioned in the previous slide, the total final purchase consideration paid for the newly acquired assets was $212.5 million US. The net amount paid at completion was $123.65 million US after taking into account various adjustments as listed in this table. The balance purchase price was funded through drawdown of the prepayment facility with Trafigura of $80 million US, net proceeds raised from the placement of CRPS of about $47 million US, and internally generated funds of the group. We are pleased with the timing of the completion of this transaction, given the favorable movement in oil prices since the period of the signing of the sale and purchase agreement. As mentioned, we will provide more information on the newly acquired assets in our results for the next quarter, ending 31st March 2022. I will now hand over to Lily who will take you through the updates of the group's refreshed vision, mission, and reserves.
Hello, I'm Lily Ling, Senior General Manager of Corporate Development at Hibiscus Petroleum. Our previous mission statement outlined our plans and goals until the end of 2021. With the new year and taking into account the latest global, social, political, and economic trends, the group set out to refresh our mission statement for the next 5 years. The process involved participation of the leadership team members and the board in various workshops held over the course of 2021. In pursuit of business growth, we intend to maintain our geographic focus in the North Sea and Southeast Asia. We will continue to assess future growth opportunities in these areas with the aim of achieving and maintaining production within a target band of 35,000 to 50,000 barrels of oil equivalent per day and 2P reserves of 100 million barrels of oil equivalent by 2026. The 2022 to 2026 mission will enable the group to continually enhance shareholder value whilst also positively positioning the company for a future in which the world will transition to a more diversified energy mix. As a group, we will strive to become even more respected, valuable, and responsible as an energy company, with this vision being pursued and underpinned by our core values captured in the acronym TEPAT, which stands for being tenacious, environmentally responsible, people-focused, agile, and trustworthy. The chart on this slide depicts our updated net oil and gas entitlements as at 1st January 2022 across our assets, inclusive of the new acquisition. As of 1st January 2022, our total net proven and probable, or 2P reserves, stood at 77.3 million barrels of oil equivalent, while net 2C contingent oil resources stood at 73.2 million barrels. Let me now provide you with a brief outlook on the oil market. As shown on this chart by Rystad Energy, they see potential stock draws in 2022 in their bullish oil demand and supply scenario. On paper, the implied stock draws would average 700,000 barrels per day in 2022 versus the implied stock builds of 1.4 million barrels per day in the base case projection. On the supply side, Rystad's bull case assumes not all OPEC Plus countries are able to meet their target production. On the demand side, the bull case is premised on the key assumption that the Omicron variant may turn out to be the one that quickly transforms the pandemic into an endemic disease where normality could resume within a short period. Overall, global oil demand would be 811,000 barrels per day, higher in the bull case than in the base case. As at the date of this webcast, Brent oil prices have climbed to above $90 per barrel, the highest Brent has been in 7 years. The chart here shows Rystad Energy's oil price outlook under their base and bull cases. Under their bull case, such a tight market not only in crude oil, but entire liquids including products will be consistent with higher Brent prices, which could average $90 per barrel or above for a large part of the year. I will now hand over back to Sivai, who will go over some further financial highlights.
Hello again. Our business performance is underpinned by several factors, predominantly the price of the Brent crude oil benchmark at approximately the time of a scheduled offtake from our crude oil storage facilities. Given that oil price is affected by global macroeconomic factors which are not within the control of the group, focus is placed on the operational performance of the producing assets, including production rates and facilities availability, as well as the management of operational expenses. We focus on remaining agile as a group and utilize our flexibility to respond to industry downturns quickly. However, when oil prices are strong, we also wish to be in a position to leverage on the opportunities we have in hand to optimize shareholder value. To achieve these seemingly paradoxical objectives, we rely on an experienced and knowledgeable leadership team, a flat organization and experienced operations and subsurface teams, which play important roles in reducing downtime and maximizing production safely. Irrespective of the oil price environment, cost consciousness is an important driver of our business performance. In this regard, unit production cost is an important metric that needs to be monitored. The careful management of costs and the efficient delivery of production enhancement projects are important elements of our strategy of maintaining a low unit production cost structure in both the North Sabah and Anasuria assets. This is a significant contributor towards our profitability. The charts on this slide show the quarterly average realized oil price, unit production costs, and EBITDA margin for both Anasuria and North Sabah over the last 12 quarters. As can be seen, the average unit production costs, OPEX per BOE or OPEX per barrel, for the Anasuria cluster and the North Sabah PSC respectively, are well below the average realized oil price achieved in the respective quarters. We wish to reiterate that whilst profits are extremely important, management's focus remains on delivering strong and consistent EBITDA. We also wish to position ourselves to remain relevant in a world that is transitioning to a future that relies less on fossil-based fuels. The group's financial performance and profitability in the current quarter was strong on the back of relatively high oil prices. During the current quarter, EBITDA attained was 139.9 million ringgit. The resulting EBITDA margin over revenue was 49%. The group's PAT in the current quarter was 48.5 million ringgit, a 17% increase over the previous quarter. During the current quarter, the group sold approximately 844,000 barrels of crude oil from North Sabah and the Anasuria cluster. From North Sabah, 587,000 barrels of crude oil net to sea Hibiscus was sold, while 256,000 barrels of crude oil was sold from the Anasuria cluster. The average realized oil price per barrel achieved for the offtakes in North Sabah during the current quarter was similar to the price secured in the previous quarter. For the Sabah offtake, $75.15 per barrel was achieved in the current quarter compared to $75.01 per barrel secured in the previous quarter. In contrast to that, the average realized oil price per barrel recorded in the Anasuria cluster of $72.02 per barrel in the current quarter was $4.29 lower than that secured in the previous quarter of $76.31 per barrel. However, average gas prices significantly increased by approximately 120% quarter-on-quarter, thus improving the financial contribution from the Anasuria cluster. Revenue generated by Sea Hibiscus in the current quarter was higher than that recorded in the previous quarter, due mainly to the higher volume of crude oil sold, the higher level of facilities uptime, and the marginal improvement in the average oil price realized. A higher level of facilities uptime contributes to a higher level of daily production, thus positively impacting unit production costs. Sea Hibiscus sold 587,000 barrels of crude oil as compared to 565,000 barrels in the previous quarter. Operational performance in the North Sabah asset improved in the current quarter. The average uptime of the North Sabah production facilities of 92% recorded during the current quarter was higher than the 81% reported for the previous quarter. The lower uptime in the previous quarter was due to a period of reduced production at the Barton, South Furious, and South Furious 30 fields, which was caused by certain restrictions on movement, quarantine requirements, manpower, and logistic constraints during the COVID-19 outbreak. The services provided by several of our contractors were disrupted, and as a result, certain routine operational outages could not be addressed promptly. In the current quarter, the average net oil production rate was 5,937 barrels per day, which was higher than that of the previous quarter of 5,185 barrels per day. The average OPEX per barrel for North Sabah improved to $13.06 when compared to $19.14 in the previous quarter, as a result of there being a much higher level of OPEX in the previous quarter from planned major maintenance activities carried out. The resulting gross profit margin over revenue in the current quarter of 75.6% was therefore higher compared to the previous quarter's 65.8%. In the current quarter, there were also higher amounts of development OPEX and supplemental payments incurred of approximately 10 million ringgit. Accordingly, despite higher gross profit margin in the current quarter, Sea Hibiscus' EBITDA margin over revenue in the current quarter of 57.2% was consistent with the 57.4% recorded in the previous quarter. The North Sabah asset reported EBITDA of approximately 105 million ringgit in the current quarter, compared to approximately 102 million ringgit in the previous quarter. Moving on to the tax-related items, the tax regime under which Malaysian oil and gas activities are governed, and is thus applicable to Sea Hibiscus, is the Petroleum Income Tax Act 1967 or PITA. The provisions of PITA are applied to net taxable petroleum income at a rate of 38%. The effective tax rate in the current quarter of 40.2% was fairly consistent with the PITA rate. Turning to the Anasuria Hibiscus segment in the United Kingdom, revenue recorded in the current quarter amounted to 98.6 million ringgit, which was greater than the previous quarter's 67.4 million ringgit. In the current quarter, 256,000 barrels of crude oil net to Anasuria Hibiscus UK was sold at an average realized oil price of $72.02 per barrel, compared to 192,000 barrels sold at $76.31 per barrel in the previous quarter. As mentioned before, the 256,000 barrels sold in the current quarter included an overlift volume of 90,000 barrels. In accordance with the relevant accounting principles, the overlift volume was in effect a sale of crude oil at the point of lifting by Anasuria Hibiscus UK. Accordingly, the initial value of the overlift volume has been included in both the segment's revenue and cost of sales at the average realized oil price for the offtake, that being 27.1 million ringgit. Hence, no gross profit has been recognized on this overlift transaction in the current quarter. Normalized revenue from the sale of crude oil and gas in the current quarter, after omitting the crude oil that was subject to the overlift, amounted to 71.5 million ringgit. This was higher than the previous quarter's revenue of 67.4 million ringgit due to significantly higher gas sales proceeds of 15 million ringgit. Normalized revenue from the sale of crude oil recorded in the current quarter was lower by 10.9 million ringgit as compared to the previous quarter's 62.9 million ringgit due to the lower volume of crude oil sold and the lower average realized oil price attained in the current quarter. The gross profit margin in the current quarter of 52.1% was lower when compared to the 57.8% attained in the previous quarter. Average uptime and average OPEX per BOE achieved in the current quarter of 75% and $24.31 respectively reflected a more favorable operational performance when compared to the previous quarter. In the previous quarter, average uptime was 69%, while average OPEX per BOE was $27.94. As a result, the average daily oil and gas production rate in the current quarter was higher by approximately 9%, from approximately 2,200 BOE per day in the previous quarter to about 2,400 BOE per day in the current quarter. Overall, the Anasuria Hibiscus segment attained better performance and profitability levels in the current quarter when compared to the previous quarter. EBITDA in the current quarter of 45 million ringgit was higher compared to the previous quarter's EBITDA of 35 million ringgit. The EBITDA margin over revenue showed a decrease from 52.1% in the previous quarter to 45.6% in the current quarter. In addition, PAT in the current quarter of 16.9 million ringgit was higher than the previous quarter's PAT by 4.8 million ringgit. As far as the UK fiscal regime is concerned, in the United Kingdom, the total tax rate applicable to Anasuria Hibiscus UK is 40%, which consists of a ring-fence corporation tax and a supplementary charge at 30% and 10% respectively. For the current quarter, Anasuria Hibiscus UK posted an effective tax rate of 39.2%, which was consistent with the statutory tax rates. Before we wrap up, I would like to hand over to Joyce to highlight a few takeaway points.
Hello, I am Joyce Vasudevan, Head Corporate Finance at Hibiscus Petroleum. I would like to close this presentation with some key messages. The group's financial performance in the current quarter continues to be positively impacted by smooth operational performance and higher oil prices. In the current quarter, we sold 843,598 barrels of oil, and we expect to deliver a base volume of approximately 2.5 to 2.7 million barrels of oil equivalent for financial year 2022 from North Sabah and Anasuria. The acquisition of the Repsol assets in Malaysia and Vietnam was completed on 24th January 2022. Going forward, we expect to add an additional 2.5 million barrels of oil equivalent to our base volume expectations for the period between completion and the end of financial year 2022, that is 30th June 2022. At current oil and gas prices, these additional volumes are going to substantially and favorably impact our financial performance going forward. Daily production rates have almost tripled from about 8,000 barrels of oil equivalent per day to about 23,000 barrels of oil equivalent per day. In addition, a final dividend of 1 cent per share was approved by the shareholders at the AGM on 14 December 2021 and was paid on 28 January 2022. Total dividends declared in respect of the financial year 2021 amounted to 1.5 cent per share. We have refreshed our corporate mission to 2026, which further maps out our plan towards becoming a more respected, valuable, and responsible energy company. Overall, we believe that the scale and profile of the group has been positively impacted with the recent acquisition, providing us with an even stronger platform to pursue future growth opportunities. Back to you, Andrew.
And that's all we have for this quarterly earnings webcast. Thank you for tuning in.